Hello, Oracles! Well, today was a glorious day to go spending. Yes, we came down significantly across all indices. Over 3.5% down in the NASDAQ. Tesla was down over 10%. It was nuts today. It was absolutely insanity. But again, this is why we have been talking about being agile and having cash ready. I am extremely grateful about the fact that I had made the decision last week to put in some stops for Apple and Enphase. I love both of these companies long term, but just seeing how the market was trending, my gut told me put in stops to protect myself. I had very significant gains in both of them. Sure enough, I got stopped out of them both, and I've been utilizing all of that cash from both of those sales to buy in and dollar cost average into Tesla and many other stocks. So today, if any of you follow me on Twitter, I'm over there at OracleTim1. I do share all of my daily trades there. And there's actually so many that I made today, I wasn't even able to post them all because I'm extremely busy at work as well. So I was able to get pretty much all of my Tesla trades out there. I mean, I started at $9.87 and basically every $10 drop that we had, I added $10. Once we dropped under 900, I started adding in $15 increments. I tried at the last minute, right before we closed, to hit at 875. It didn't go through. That's fine. It's primed and ready to go for the morning, and we've actually been dropping more after hours down to as low as 860. So I might actually be able to get it even lower tomorrow morning. So I also added today to AMD, I added to NVIDIA, I added to Palantir, I added to SoFi, I added to BODY, added to SLI, lots and lots of different ads. And all of those were little ones, just like 1 and 2 shares here and there as I dollar cost average down. These are companies that I do like long term, but if I do get profitable in the next swing up that we have, I will sell out of them. I have no problems doing a little bit of trading in this market. So I kind of look at it sort of like the weather. You cannot control the weather. All you can do is just kind of listen to what the weathermen have to say, hope that they're right, and prepare for it. And then whatever happens, you just deal with it. That's kind of how the market is right now. It's really like just a different bunch of weather. I mean, here in New England, we get all 4 seasons. I know many of you live in different areas where you get the same thing. Seasons all over the place. You know, it gets super cold in the winter, you get crazy different seasons. Some days you can get all 4 seasons in the same week. So, you know, this is why you've got to be prepared. And so by having this cash on the side, I'm ready for whatever the market's going to throw at me, just like I'd be ready for whatever weather's going to get thrown at me. Reminds me of my race that I had in Iceland, 24 hours, and it went everywhere from 42 degrees and raining to ice storms to clear overnight with the northern lights coming out. Absolutely wild. That's basically what the market is right now, and I prepare for it all. So it's almost like that race was like training for the market, so this is phenomenal. And so what caused the big sell-off today? I think we are still just pulling back from information about the Fed raising rates. Looks like we've got priced in about 3 50 basis point hikes priced in, potential future recession priced in right now. We're still getting excellent indicators, you know, about future inflation expectations that are coming out indicating that what the Fed is doing is actually bringing inflation down, but we still haven't gotten there yet, so we continue to price this in. But the fact that we do have indicators that the Fed is working on things and it's bringing the inflation down is a great sign, which leads me to be okay with buying more right now. Because when we get to the point where we do get that inflection in inflation, we do see it coming down, and then the Fed can maybe make a decision to back off from their hawkish stance, then the market can start to skyrocket. So again, when that happens, I don't know if it's going to be a long-term skyrocket, but I think that's when we're going to see the turn into the next wave up that we had basically back in March when the Fed raised the rates the first time. And what I'm seeing right now is a very, very similar pattern to what we had seen in Q1. I've talked about this before, and it's really all about, you know, the sentiment that we hear in the media. The underlying news as to what is going on has not changed. It's just really a matter of how prevalent is it in the sentiment in the media. And so, we still have high inflation. We still have the Fed raising rates. We still have Russia-Ukraine war going on. But for about a month or so, really was kind of quiet. We didn't hear much about it. Now we are hearing more about it. And it's almost exactly the same thing. We got the Fed minutes that came out. The stock market started to pull back. We had the Fed coming out explaining about we might have to raise rates higher than we predicted so that it's falling even further. We're getting more information about Russia-Ukraine perhaps escalating. That's bringing it down more. COVID situations over in China, that's bringing the stock market down more. So all of this information all at once is just bringing us down, very similar to what we saw in Q1. So will we see the same pattern reverse and come back out? This has yet to be seen, and when it will happen, I don't know. I'm still predicting that the May 11th CPI data is going to give us a good indicator as to what we can expect from the Fed at the next FOMC meeting, and perhaps lead us to what we can see on June 10th during that CPI data. So lots of uncertainty, but the Fed right now, basically whatever they say is what is turning the market. And so I think part of what the Fed is doing is instead of actually having to raise rates, they can just talk about raising rates, and that is what's causing the market to chill out and pull way back as it is. So now as soon as the Fed says, hey, you know what? Inflation's doing better, we are only going to raise 25 basis points instead of 50, then the market is going to rally. And then of course we do have our market manipulators that are out there forcing all of the stocks to come down as they did before. This is going to flush out any margin calls that are going to be there, are going to get flushed out. And it's just crazy right now that people are still in margin, but hey, people are seeing what is going on. They're trying to trade with timing of the market and these cycles. They're taking a gamble, and the bigger fish are winning out. And so this is really where being the agile investor comes into play. Because if you are an agile investor and have the cash on hand, then when we see the market swinging in the direction that it's going, let the market manipulators manipulate the market all they want. And all you can do is just sit back and take what they give you. If they give you good buying opportunities, take it. If they give you an opportunity to sell something you want to get out of, take it. This is what we need to do in this kind of market that we're in. We are not in a long-drawn bullish market that we had seen for about 10 years, from about 2011 to 2021. That's gone. That doesn't exist right now. Right now, we are in our market manipulator market. These people are pulling the strings all over the place. So just sit back and let them decide what they're going to do with the market and make decisions based off of that. And of course, it's not going to be a situation in most cases where you're just gonna be like, oh, this is the point where I want to go all in. For instance, today, like I said, I made a lot of different buys as the stocks were tumbling down. Where it's going to go tomorrow, I don't know. We had some earnings today for Microsoft, for Google, for Enphase. Microsoft was basically flat. Google missed. Enphase was a big beat. So all of these are going to kind of adjust the market in the morning. So we may see a large gap down tomorrow on top of what we had already seen in the losses today. We don't know. So just sit back, let the market do its thing, and then just react accordingly to it, but do it in small steps. Now again, this isn't financial advice. This is just what I'm doing. And so far it has been very successful for me for this year. My portfolio is not up because we are significantly down, but I am prepping myself to be up even more if I don't do anything. Similar to what I saw in Q1. In Q1, my portfolio was down significantly for January and February, but because I made buys as we were coming down, when we hit March, my portfolio was significantly higher than it would have been if I just held or did nothing. So I'm preparing to do the same this time around, except I sold more things to have more cash available, and I'm altering my strategy to buy even heavier the more we go down, and I've got more cash on hand for that. Now, for those of you who can do fractional trading, you've got to remember that $15, like I do for Tesla when it's under $900, that $15 is going to buy me more shares the lower the price goes. So by doing it in that manner, I will actually be buying more and more shares as we come down. And as we spoke yesterday when it comes to Tesla, adding more shares and accumulating more shares is the goal in this type of environment. Focusing on the price is not what you want to do because the price is going to be all over the place and it's not going to make your portfolio look pretty most of the time, seeing as it fell almost 11% today. But using this to your advantage to accumulate shares is going to make a huge difference when we come out of this. And so I think the next 2 weeks can be very rocky. We've got lots of tech earnings still to come out. We've got the FOMC meeting on May 5th, and then we have CPI data coming out on May 11th. And apparently there's something going on with Russia as well that could be happening around the May 10th timeframe. So lots of stuff happening over the next 2 weeks that could be more negative catalysts going on. So this is why I'm buying in just little bits and just letting the market decide what it's going to do, and I will react accordingly to it. And now whether this is going to be the second bottom that we had talked about previously, I don't know, but we are definitely on this downward trend similar to what we saw in Q1. So I'm preparing for that to happen, and I think if we do hit a bottom, it'll either be around that mid-May timeframe, or depending on the CPI data, might not happen until June. So I think that May 11th is going to be a very significant and pivotal time for us. Let me know in the comments below, did you take advantage of any of the sale prices that we saw today in any stocks? If so, let me know which ones and what your plans are for the future with them. Thank you all so much for watching. I appreciate all of your support and feedback. If you have not subscribed, please do so down below. Sign yourself up for notifications. I am over on Twitter at OracleTim1. I share all of the latest Tesla news, pertinent stock market information, and all of my daily trades. Thank you so much. Have a great one.